Dear children, welcome to my channel AME, that is Accountancy Made Easy. And today we are going to start the topic Past Adjustment under the chapter Accounting for Partnership Firms Fundamentals. Children, this topic is very important from the board point of view because most of the times this topic comes from this chapter. Okay, so sometimes a question of 4 marks and sometimes a question of 6 marks is being asked from the topic. So it's a very important topic. So we are starting with this only. Okay. Now first of all, the meaning of past adjustment. So children, what happens that in any partnership firm, after closing the books of accounts, if it is discovered at the end of the financial year that there had been certain errors while preparing the accounts or some omission had taken place of some of the provisions of partnership deed, then in that case, instead of altering the already prepared books of accounts and the signed balance sheet, the partners decide to bring an adjustment entry or bring the corrections, rectify the errors which has taken place after the closing of accounts. This is known as past adjustment. And children, this past adjustment is done in the beginning of the new year. So that is the meaning of past adjustment. So basically what is happening here, that if they are discovering, the partners are discovering that the books of accounts when they were preparing, something is missing which was to be done or something has been done wrongly. Means sometimes it may happen that the profit sharing ratio was something else, but by mistake they distributed profit in a different ratio, or IOC, interest on capital, which was supposed to be given, they have not given, or they have charged at a higher rate or at a lower rate. Interest on drawing was not supposed to be charged, but it has been charged. So these are all the examples of the errors which might take place while preparing the books of accounts, which cannot be altered, which cannot be brought in the already prepared account. So an adjustment entry is passed for the same, as well as there is a procedure of passing few adjustment entries for each and every error if there are more than one errors. Okay, so right now we are going to understand the scenario when a single adjustment entry is passed. So children, now let us understand the first method of past adjustment, that is by passing a single adjustment entry. So in this method, children, what will happen, that whichever error is there, so it will be calculated that what amount should have been given to the partners when there was no error. Okay, an adjustment table will be made, and in this it will be calculated that what amount should have been recorded. So what all should have been given to the partners or taken from them if everything was correctly applied, all the provisions were correctly applied. Okay, so that will be calculated first. Then it will be calculated that what has already been done, that means the wrong part which has occurred, the error which has occurred will be written here, and then both the amounts will be compared to find out which partner should get more money and which partner should pay back the money. Means the one who has by mistake got more money will pay back that amount to the other partner who by mistake has got lesser amount. Okay, so that we are going to calculate in the adjustment table, and after understanding, after finding out that who will get more money, who will pay the money, then an adjustment entry will be passed, and in this way the correction will be done. Okay, so now let us understand this with the help of a simple question. So with the simple question, you will be able to catch hold the concept properly, and then we will proceed for a little typical question after that. So now question number 1 for us. A and B are partners in the ratio 2:1, having capitals of rupees 10 lakh and 20 lakh respectively, on which interest on capital is applicable at the rate 10% per annum, which was omitted while preparing the books of accounts. So basically interest on capital was to be provided to the partners, which has not been given. So we have to do the correction for that. Pass a single adjustment entry for the same. So in this question, they have specified themselves that they want a single adjustment entry. So we are going to proceed for the same. Okay. So first of all, we have to prepare the adjustment table in the working note, and then the result of it will be reflected in the main question. So children, you might ask, ma'am, that why, if we have to prepare the adjustment table first to calculate, so why we are not showing it the very first thing against the answer number? So children, the reason is that they have not told you, or they have not asked you to prepare the adjustment table. They have asked to pass a single adjustment entry, right? So whatever has been asked in the question is the main solution that we have to show against the answer number, and then below that we will solve whatever else is required to do the main part of the question. Okay, so that is the working note. And again, there can be a question that, ma'am, if working note is not having any marks, or it has not been asked, so can we do it somewhere at the back of the answer booklet, or somewhere on some other notebook? So again, the answer is that it should be right below the main question, children, because in the board marking scheme there happens to be marks allotted for the working notes also. So it's not a wasteful thing that we are doing. It is an important part of the solution, but it is the part which we need to complete the main question. Okay, so that is why it should be right below the main solution only, and it carries marks. Sometimes, rather most of the times I would say, there are marks allotted for the working notes also, but sometimes there are not allotted also. So that depends, but then we should show the working note properly. Okay, so now we have understood from the question that interest on capital has to be provided, which has been omitted. So let us start with that. Okay, so amount that should have been recorded. In this we are going to write interest on capital, interest on capital at the rate 10% per annum. So the amount of capital for A is 10 lakh rupees. So 10 lakh into 10% will give us 1 lakh as the interest, and for B it will be 2 lakh because B's capital is 20,000, and in total the interest is coming out to be 3 lakh. Okay, and children, what do we do with this interest in the partner's capital account normally? Do we credit it or debit it? So since this interest partner is earning, it is going to increase the partner's claim, so that's why it is credited. So it is a plus item for the partner. Fine. So that's why we have written credit word here. Now, before going for the next step, I would like to tell you the significance of this 3 lakh rupee, which is the total interest. Okay. So let me make a very small profit and loss appropriation account for you in the rough column. Profit and loss appropriation account, children. Why it is prepared? It is prepared to distribute the profits, right? To find out the divisible profit. So it starts with the total profit of the year. So I am taking a separate example just to explain you the significance, how to proceed for the omission of interest on capital. So if in any business there is a profit of 10,000 rupees, okay, and IOC has to be given as 2,000, it can be 1,000 each for two partners. Okay, so how much is the divisible profit in that scenario, children? The divisible profit will become out to be, divisible profit will become 8,000. How we have calculated it? 10,000 minus 2 will give us 8,000. Fine. But in that scenario, if the interest on capital is not provided, if it is omitted, then what will happen? The full 10,000 rupees will become the divisible profit. That means that 2,000, which should have been given as 1,000 each, instead of that it will be given in the profit sharing ratio by mistake. Okay, so now we will come on our step 2. Step 1 is that we have calculated that A should get 1 lakh of interest, B should get 2 lakh of interest, total is 3 lakh of interest. So now if this 3 lakh of interest has not been given to them as interest, then actually how it has been distributed? In the profit sharing ratio. So children, that is our step 2. So this 3 lakh rupees we are going to distribute in the profit sharing ratio, because what is the heading, children, here? The heading is amount already recorded. So already what we have done? We have distributed 3 lakh in the profit sharing ratio, which happens to be 2:1. Fine. So let us see. It is clearly distributed easily. 3 lakh upon 2 by 3 for A. So it will give you the amount of 2 lakh rupees. And for B it will be 3 lakh into 1 by 3. It will give 1 lakh rupees. And we are going to put it in bracket because now we are going to reverse it. It was given to them earlier, credited, but now it has to be debited. It has to be reversed because it was wrongly done. Okay, so debit for these two amounts as well as the total. Now let us deduct and see. So this is 1 minus 2 will give us minus of 1 lakh rupee, which means debit. Minus answer if we are getting, that is the debit, because debit balance is bigger. Fine. So, and if we understand otherwise, so we can understand like that A should have got 1 lakh only, but he has by mistake got 2 lakh. So he has got 1 lakh extra. So he has to return that. So for giving away, the partner's capital account is debited. So that's why debit. Fine. Now B should have got 2 lakh rupees, but he has got only 1 lakh till now. So he will get 1 lakh more. Okay. So credit for B. And if we do mathematically, 2 lakh minus 1 lakh will become plus positive 1 lakh. Fine. And here in the total column, it will always become nil, because whatever amount should have been given, that has already been given and both are compared. Fine. So this is our adjustment amount. A will be debited with 1 lakh and B will be credited. Now one thing is left, that is only to write here in front of this we can write net effect, and then we will pass the entry, adjustment entry, and the entry will be A's capital account debit 1 lakh to B's capital account 1 lakh, and the narration also needs to be written. So being omission of interest of capital now rectified. The interest in capital which is omitted is now rectified. So this is our adjustment entry, and this is the first method of past adjustment. So children, tell me, don't you find it easier? It is very simple. Let us quickly review. So what is to be done? First of all, read the question carefully twice, the very first requirement, then see that what should have been given in the question, then provide those things, and the total of it then will be reversed by putting that in the profit sharing ratio, because if it has not been given as the required thing, IOC or salary or commission, whatever is in the question, in this question we have only one thing. So if it has not been given in that ratio, it is actually given in the profit sharing ratio. Then compare the two, and whoever has got less should be given more by crediting, and whoever has got more should be debited, and the money should be taken back from that person, and in this way the entry will appear. Okay, so I hope now this topic is clear to you with the help of this simple question. Now we will proceed for a little higher level of question with more provisions.